Welcome to Cat Eye US Stock. We watch markets with calm focus and sharp instincts. It's Thursday, May 14th, and the vibe, risk on in the headlines but cautious underneath. The S&P and Nasdaq pushed to fresh records, and the big spark was Cisco up about 13% as traders repriced it for the AI infrastructure build-out. But this wasn't a rising tide session. It was more like a few boats flying, and the rest of the market quietly arguing under the surface. Look at the S&P 500 heat map, totally bifurcated. You had green, but it was incredibly concentrated, especially in AI-adjacent tech. Cisco was the standout bright box. And inside semis, violent divergence. Nvidia and Broadcom ripping, while Qualcomm, Intel, and Micron were sharply red. Meanwhile, consumer staples and utilities stayed consistently light green. Classic hideout strength on a day that still didn't feel fully comfortable. That heat map shape perfectly matches the rotation story, a barbell. Traders leaned into the cleanest AI visibility, think networking, and select AI semis, while also parking money in defensives like staples and utilities. On the flip side, consumer discretionary lagged and industrials had a notable weak pocket. The message here is clear. The market will gladly pay up for AI. But broad participation? Still nowhere to be found. So, here's the tension that defined the session. The index can levitate, sure, but it's doing it on a very narrow set of shoulders. Several megacap names were muted or even red, while the benchmarks printed records. And the semiconductor complex? It wasn't a unified wave. It was a sorting machine. The whole day read as controlled aggression, buy the AI generals, but keep that defensive ballast. Now, one piece of chatter making the rounds. Traders were flagging elevated volume in near-the-money Nvidia calls like the $235 strike as the stock pushed higher late in the day. Important caveat here, that's just market chatter and flow talk. Not a fundamental headline, but it totally fit the day's vibe. Positioning and momentum reinforcing the chase for AI generals. Cisco was easily the loudest story of the day. It ripped over 13% on earnings, and a massive guidance shock tied to AI and networking demand. The market treated this like hard proof. AI spend is finally showing up outside the usual GPU complex, and that sudden re-rate, it pulled the entire AI plumbing trade higher. Nvidia stayed firmly in the driver's seat, up over 4%. Analysts framed it as continued AI leadership, with momentum and flow doing real work going right into the close. And with that options chatter circulating, Nvidia became the absolute focal point for the whole positioning as the marginal buyer debate today. Broadcom was the other big engine, up about 5.5%. The move tied directly to that AI infrastructure sympathy bid right alongside Cisco. When Broadcom is ripping with Nvidia, it's a crystal clear signal. The market is still paying up for the plumbing, but it's also a harsh reminder that leadership is concentrated in a very short list. Qualcomm? It told the exact opposite story, dropping over 6%. Analysts pinned it on handset exposure concerns and serious skepticism on near-term offsets, as money quickly rotated out. This is the clearest example today that we are not in a blanket semiconductor rally. It's a ruthless, visibility-driven sorting process. Then there's Boeing, a clean red flag on an otherwise green day, down almost 5% on company-specific headline risk. It was a massive red blotch in industrials. And it matters because Boeing is a Dow component and a major proxy for cyclical confidence. Today, it just reinforced that this was not a broad reflation sprint. Amazon was yet another reason the rally felt so selective. It slipped just over 1% amid consumer discretionary softness, completely underperforming while AI captured all the flows. When a mega-cap general like Amazon is red on a record session, it perfectly explains why traders called the breadth fragile, even with the major indices glowing green. Looking at the near-term setup, the calendar doesn't flag any major US macro releases for Friday, May 15th. So, the market stays purely in price action mode. We're watching to see if today's AI leadership actually follows through. Then next week, attention shifts. We've got pending home sales on Tuesday, FOMC minutes on Wednesday, and a packed Thursday with jobless claims, the Philly Fed, and flash PMIs. Net, we got record close optics, but the character was incredibly selective. AI infrastructure did the heavy lifting, defensive stayed quietly supported. And semis? Just a brutal tug of war between clear winners and clear losers. Heading into the next session, it's less about the index level and way more about whether this leadership can hold without the rest of the market rolling over. Keep your eyes on the follow-through and watch that Thank you for watching Cat Eye US Stock. Stay curious, stay calm, and we'll see you next time.